Good morning, traders. Welcome to the Asian preview and the North American wrap from PrivateerFX. It was all about cable today. We discussed yesterday. We were waiting the MPC meeting and the inflation report, and Carney delivered the 25 basis point hike, and as expected, and the market, as you can see here on the hourly, we did have a little pop initially, about a 40 point pop up to 132.65, and the gilt started ripping higher, and he definitely sounded dovish. The vote count was 7-2, but he did mention that there would probably only be 2 hikes in 2018, and the market had been pricing in 3. So this is kind of it was definitely perceived as a dovish hike. Cable reversed, and you can see here on the hourly it went from 132.20 where we were prior to the announcement, and very quickly went down to 130.85 with a little bit of a bounce up to 131.30, and then we continued to kind of drift lower. You can see we're right near the lows of the entire move. 130.43 was the low. So this is kind of what we were hoping for was a dovish hike, and to sell the initial knee-jerk reaction higher. If you take a look at the daily chart, this is interesting. This wedge pattern that we have. So we took out the top side a few days ago, closed above it. Then yesterday, remember we had the reversal lower day, and you can see we closed back below that trend line. And this is one of our favorite setups, where we have a false break to the top side, come back into the triangle, and then you can see how we closed below that trend line and the 100-day moving average. And we're expecting lower prices. So 130.25 is the next support level here, this old daily low. But we can see this thing trading down to the 200-day moving average, down to like 128.50, 129. And we expect to see this under further selling pressure. We can pop over. We'll take a look at let's take a look at some of the other sterling crosses while we're at it. Here's a weekly sterling yen or cable chart. Sorry, we have an outside reversal week forming. If we close the week under 130.70, again, here's that 130.25 level. So we're watching that closely. We also have the sterling yen, which we are short of. Again, another outside reversal week under 140. It comes in around 149. The figure, we're just below that as we're speaking. So those are the. Let's take a look at euro sterling. That's also an interesting chart. So you can see here on the daily euro sterling where we talked about this false break under the 200-day below this old low. We had that little doji reversal higher. That was telling us something. This is when the market started thinking that we were going to have that it would be a dovish sounding hike. And sure enough, we bounced back from the 200-day right up, and the high today was the 100-day moving average at 89.39, and we're hanging around there right now. So, my guess is that we continue higher with more sterling weakness, and this all happened in one day. Let's pop over the hourly, some hourly charts. Let's take a look at dollar yen. Dollar yen was kind of an interesting today, as we were starting to get some information about the tax bill that was due out and that was leaked well in advance. Let me go down to the 15-minute chart, because this is interesting. Take a look at this 15-minute bar right here. It was 9 o'clock Chicago. We went from 141.10 down to 114.10 down to 113.55. This is one of the biggest 15-minute bars we've seen. You could scroll back on these charts for a long time. We just don't get these types of moves, and there was definitely some disappointment from some of the tax stuff that had been released, and that's a pretty significant sell-off. Of course, it reversed back up as dollar yen always does. And but it is interesting to see. The market must have been a little bit long of dollars at that point. Um, Everything that was leaked early was confirmed. Wall Street Journal also leaked that Jay Powell was going to be the next Fed chair. Trump announced that this afternoon during North America hours. Um, and the market had absolutely no reaction at all to Jay Powell. It sounds like they'll announce the vice chair in the next week or so. We're still expecting that to be Taylor. That could actually uh, add a little bit of volatility around that announcement. Um, let's take a look at what do we have for upcoming event risk. Let's go to some potential break trades going into tomorrow. Uh, Here's dollar Canada. This has been on our chart all week. This has come back down to 128 the figure, which is held for now. But this 129.20, we do have the CAD jobs number tomorrow and the NFP. We like this. We like this break. We think it's an important break, and that would be we would need a weak Canadian number, and we would need a strong U.S. number for the catalyst to get through this 129.20 area. Here is this is something a little bit off most people's radar, but we're looking at these charts earlier today. 2017 highs in Euro Stocky are up here at 980.50, 980.60. This looks like a break trade to us, and we'll be paying attention to this in the incoming days. We need some sort of bearish Swedish news coming out I think, for that catalyst. Um, and then let's pop over to the dollar Swiss, which you can see we did have that when dollar yen sold off this morning. We had dollar Swiss go down to 99.50. This area here, 99.40, is key. So if we are going to get some dollar weakness, I think that dollar Swiss is the currency. It doesn't lie. It shows us the way. I'm not saying I'm bearish dollars, but if we breach this 99.40 level, I'm looking for lower prices down to kind of 98.60, 70 area. And this could be on a very weak NFP. So just looking at the event risk ahead, Australian retail sales coming out shortly. Aussie's been very sensitive. Any of the economic data. Let's remember, if you look at the Aussie, Aussie was one of the stronger currencies on the board today, and that was off after that trade balance data that we had yesterday. Here was this big move up during the Asian morning yesterday. Hold on, this was yesterday during the trade balance number. So we did have this big move up, and if you look at the daily, remember this is a level that we've been looking at. We got the close under the 200-day. It traded under here for a while. Held some this 76.25 was a bit of a level. We've now today during our session we closed back above it. So I think if we get a strong retail sales number, I don't see why we can't go up to 77.30, which was today's high, or maybe even 77.60, 77.90. Still in sell rally mode here. Tomorrow during the North American Open, we have the non-farm payroll expected 312,000, average hourly earnings plus 0.2%. We think it's going to be a very tricky trade because it's basically just taking back what it gave away in last month due to the hurricanes. So we're not expecting a huge move. Maybe if we get a stronger average hourly earnings, you can get some dollar strength, but I'm not selling dollars on a weak average hourly earnings because it's expected to drop from 0.5 down to 0.2. We have ISM non-manufacturing and durable goods. And at the same time, the U.S. NFP, we have the Canadian jobs number expected plus 15,000. So that should do it. Keep an eye out for us on the European and the North American Open. And best of luck to you in this trading session, and we'll speak to you soon.